Hello and welcome to this week's edition of Echo45 Advisors Market and Economic Update. Warren Buffett recently announced his retirement after 55 years as CEO of Berkshire Hathaway. So, in this week's video, we're going to discuss the market environment through the lens of Warren Buffett's wisdom along the way. One of the most famous Buffett quotes is to be fearful when others are greedy and be greedy when others are fearful. This continues to resonate in today's market environment, especially after a recent period of market volatility. This quote is a reminder to focus on the key principles of investing around patience, discipline, and maintaining a long-term perspective. While steady markets feel comfortable, opportunities often emerge during periods of uncertainty. As policy shifts continue to influence market movements, Buffett's time-tested wisdom serves as a valuable compass for navigating today's complex financial landscape. First, let's talk about earnings. This chart shows the S&P price-to-earnings ratio using forward earnings estimates over the next 12 months. It shows that the PE ratio has started to trend back down closer to historical averages. With recent market volatility and pullbacks, valuations have come down from their previous highs, in what is often called a valuation reset. After reaching nearly historic highs earlier this year, the S&P 500's price-to-earnings ratio has now settled in line with its decade average. As Buffett wrote in one of his annual letters, "Whether I'm buying stocks or socks, I like buying quality merchandise when it's marked down." While short-term concerns about tariffs and economic uncertainty have contributed to the recent pullback, long-term investors may find opportunity in these more reasonable valuations. Next, Warren Buffett wrote that it's important to focus on the future productivity of the asset that you're considering. This wisdom is relevant as we examine today's corporate landscape and the trajectory of earnings growth. Corporate America continues to demonstrate remarkable resilience, with more than 3/4 of S&P 500 companies having reported first quarter earning results. Earnings have grown at an impressive 12.8%, significantly exceeding the 7.2% initially projected. This chart shows the S&P 500 index alongside its trailing 12-month earnings per share. It highlights that over the long run, the stock market tends to follow earnings, which in turn tend to track economic growth. This is how economic growth often comes to be reflected in the market. Finally, this chart shows dividend yields by sector. Despite ongoing market uncertainty, dividends have continued their upward trajectory, enhancing total returns for investors. When companies reduce their dividend payments, it often signals management's concern about deteriorating financial conditions. As Buffett said, it's not good news when any company cuts its dividend dramatically. Fortunately, that's not what we're seeing in today's market. This positive trend in dividend growth reflects the underlying financial health of corporations across America. Despite market volatility driven by tariff uncertainty, corporate America continues to demonstrate underlying strength through solid earnings, growing dividends, and strategic investments in future capabilities. The recent valuation reset may present interesting opportunities for those focused on the long term. We hope you found these insights helpful. If you would like to discuss earnings, the economy, or your portfolio in more detail, please don't hesitate to reach out. We look forward to speaking with you.